Welcome back to Trading 360. I'm Nicole Petalides. It's time for the big three, where the sell-off is underway for the second day after the tariffs were announced in a big way. And the question is whether or not you can find some opportunity. Certainly not looking for the bottom at this moment, not according to anybody I've talked to. It's time for the big three. 3 stocks, 3 charts, 3 trades. Rick Ducat will take us through the charts here to take us through the trades. Aquiles Larrea, founder, CEO of Larrea Wealth Management. I'm glad you're here, Aquiles. No bottom at this moment. Nobody's saying bottom today. I mean, is it the bottom on Monday? Is it a month from Monday? How do you navigate?
In this, you have to be well aware that the bottom may not be within a week. As you say, I'm looking at anywhere between 2 and 3 weeks. It could actually be a month, and you have to be mentally prepared for that. But you also have to be strategic and look some opportunities are out there. Powell's going to talk today. There could be some good or bad news in there. We don't have enough information to make all these decisions today, and I wouldn't do that. But here's some stocks today that we could talk about and hopefully make some good decisions.
Look, Aquiles likes the volatility, and you're not alone. I have to say, a lot of the traders I've been speaking to are somewhat comfortable with the sell-off. They actually like bringing something down here, more value added at a lower price kind of thing. So traders are okay with what they've been seeing. I don't know how much farther down they want it to go, but I know I've had people message me today saying it just needs to go a little further. I mean, you said the same. So let's talk about some of the names. First up, you have Con Edison, a name that we need. Good economy, bad economy, I'll say that. Your thoughts on Con Ed?
Yeah, Con Ed is one of these stocks that when the markets are going bad, it's going to hold its own. It's a flight to quality type stock, not unlike AT&T, not unlike Altria Group. So these are the type of stocks that can hold their own in the weather of the storm. Right now, we are in the thick of the storm, but Con Ed also has some potential opportunities for big growth. We can see that they're probably going to end up raising their rates when the summer closes in. They always do that. And as the winter starts coming, they're going to raise their rates again, or they're going to stay pat and have record profits. They're just that type of company. So we see the upside, conviction, stronger consumption, higher pricing models. Con Ed is just a solid moving forward, but it is not something you think like a growth stock. You need to think of this 6-7% in a year, but a decent dividend. So you may make 10% or more from it. It all depends on how the rest of the year goes.
So 6 to 7% gain for the stock, but you also have plus the dividend, right? Plus the dividend payout. Flight to quality, looking at Con Edison. Rick, take a look at the chart, please.
Sure. Fun fact, Con Ed is the oldest continuously listed stock on the NYSE. It started in 1823. And Aquiles said that, this is maybe not a growth stock here, but it's sure been trading like one lately. We've seen a very strong rally off these lows, up almost 30% from this point here near about 87. We can see an interesting situation developing as well. We had this upward channel from which we are breaking out to the upside. We have given back a little bit of those gains since the open, but we're still remaining above yesterday's close. Notice as well, RSI has broken above its red downward sloping trend line here and has pushed into the overbought area, that threshold of 70, typically a sign of strength in a upward trending stock here. So if we were to look at our moving averages, we can see they're all trending upward. They're all diverging apart from each other. The trend by this measure seems to be continuing still. So now we can add our standard deviation channels and our volume profile study here. We can see that price is perhaps taking a breather near this +2 standard deviation channel, this orange line right here, 2 standard deviations from our linear regression line, our line of best fit. If we were to keep moving upward there, the +3 channel currently comes in right there. I cleverly reused that circle near about 119, and we can see to the downside the +1 channel lines up with the 21-day exponential moving average in yellow. So that would be around maybe 107. So that could be a supportive area to consider.
Okay. Thank you, Rick Ducat, for that chart. Final thought here on Con Ed, the oldest continuously listed name here at the New York Stock Exchange. I actually like that fun fact a lot. 1823. This building itself wasn't built till the early 1900s, but you know, I guess they were putting all those together when they had the Buttonwood Tree Agreement outside and they started the list. So let's talk about any final thoughts here and then get to Humana.
Yeah, when you're going into a utility, you have to realize that if we start to see an interest rate spike, that the stock price could go down a little bit. So you have to be aware if Fed decides to lower interest rates, it's the opposite effect. We should see a move to the upside. So, you know, a lot of debt on their sheet, but a lot of move to the upside potential, especially with the coming summer months and added consumption and move.
I mean, healthcare is an area that a lot of folks picked for 2025 before all the talk of the tariffs came. Still like this group, it seems. You have Humana here. Tell me a little more there.
Yeah, you know, I was looking at both Humana and Cigna, and I was leaning towards Humana, and my team agreed with me simply because these stocks, if you just start at the point, the trend is your friend. And there is a huge trend in the healthcare stocks that is not going to abate anytime soon, in my opinion, simply because you have an aging population, the baby boomers, all using Humana services. So we could see record profits going forward in the next 6 months. I don't think it's an overnight thing with Humana, but once again, this is another safe haven during this time. So you don't have to stay here forever, Nicole. You can stay here 6 to 12 months and then decide to move on. If you look at the stocks doing today, it's not a bad little bump. Just like Con Ed, we saw a little move to the upside just the last 2 days. I see the same thing with Humana. I'm also looking at a growth in the next 12 to 18 months, about 7%. Might go as high as 8% at this point, but it is a super conservative stock. Sometimes they act like growth stocks, but I'm thinking with what's going on here, we're going to stay conservative. We're going to stay in the 7% region.
Yeah.
We're going to have lower volatility in these type stocks too. And you think that, you know, technology is immune to what's going on here. I mean, not immune to what's going on here. Neither is healthcare. We're going to see some volatility. We could see a regression to the mean here. But more importantly, we do have that potential for double-digit moves to the upside.
It's interesting because when you come on, you often have picks that are going to go up 10%, 10 to 15%, 12 to 18%, and you are being more conservative now. So you're finding value, but saying don't expect as much in the next 12 to 18 months. I mean, you're really honing in on the fact that we might really see some volatility. Thoughts on Humana, Rick?
Yes, actually kind of an interesting setup here. When we look at what's been happening recently, we can see that we've had a longer-term downward sloping trend line starting with those 52-week highs near 406, connecting here and here, and most recently here during the past weeks, including today. But also couple this with the upward sloping trend line starting with the 52-week lows near 213. So now we have a pretty consistent triangular pattern here. We have decreasing volatility, we have price compressing in an increasingly narrowing range that is centered around two of our moving averages, yellow 21-day and orange 63-day exponential moving averages here. So now we have almost no space left in this pattern, so many traders likely would be curious to see if we get a breakout beyond either of these two boundaries. So perhaps a move maybe above 270 and below 260. Those would be some potential breakout levels to consider here based on today's trading. Notice that RSI also exhibits a very similar triangular type shape here. We are slightly above that 50 midline, so perhaps more of a bullish lean here, but really I wouldn't make too much of that one way or the other until we get some kind of breakout that corresponds to RSI and price in tandem. So now if we were to look at our other studies, volume profile, standard deviation channel, here's more evidence to consider perhaps for a potential breakout, as we are very close to not only our moving averages but also our volume profile point of control, the area of heaviest trading, and our linear regression line, our line of best fit, our fair value idea. So between 250 to 260 or so, there's quite a bit of potential support to consider. Potential resistance maybe around here near 290 based on this volume node, but really here our old high closes after our move to the downside 304. That's the level to beat, Nicole.
Okay. Thank you for that, Rick. And then we'll get to American Waterworks, which 1 month is up 10%. Year to date, it's up almost 23%. I mean, it's incredible. It's been on a run even this week, which has been so tough. It's up 4.5%. AWK. Tell me more, Achilles.
Yeah, it's one of these stocks that is super resilient in these type of markets. A lot of their parts, I would say almost all their parts, are really coming in domestically. We're also seeing in terms of the company strength, and they hold their own with the volatility. They have gone up 10%, but I've been in on this stock for years. And the one thing that it's really occurred to me is that how tough it is going in any bad market. And that's the type of holding you want to have. We don't put a ton into American Waterworks, but what we realize is that when the markets go south, we have a good winner here to help us fill in the gaps in the technology in the portfolio. So this is another winner.
Okay, and it clearly is. I mean, the performance has really shown great moves and real resilience during this volatility. Rick?
Yes, so here's what's interesting about this chart is first we established this double top type high point here, roughly around 149, 150 or so. Then we had our situation where we've kind of formed a cup and handle from their type of pattern. By that I mean we have a resistance level that we've established. We have this gradual bottoming out here and subsequent rally that took us up to the initial resistance level at which we are rejected. From there, we retreated back to our support at the yellow 21-day EMA, and you could have also drawn a trend line that matched up pretty closely from there, and then we rallied, and so far it's looking like we're hanging on above that initial resistance point. So you can see it's kind of a coffee cup type shape. Here's our cup part, and then the handle would be right there. So that's the thinking with this type of pattern here, would be a strong rally, a brief retreat, then a rally that breaks out above that resistance, and hopefully for the bulls would hold on. That would be the expectation here. So that means now 149, 150, that area is the new support level to keep an eye on here. And, you can see as well that RSI has broken its downward sloping trend line. We are above that overbought area once again. So another bullish signal potentially here for this stock. Now when we look at our volume profile study, sometimes it's very helpful, sometimes there's very clear spikes. This one, not so much. It's kind of a heavy trading across the board here, but this is the standout level, our point of control, near about 141, so potential support around that area if something does go awry here, but resistance, old highs right around here, +2 standard deviation channel for now could be a point of consolidation.
Okay, Rick Ducat, thank you. And a good look there at those three names. We had Con Edison, Humana, and also American Waterworks. You know, right now, the NASDAQ 100 bear market territory, Dow's in correction territory, the Russell is in correction territory. Jobs picture, in fact, President Trump has taken to Truth Social saying great job numbers, far better than expected. It's already working, hang tough, we can't lose. He's trying to obviously build some optimism and rah-rah behind the moves here while people are feeling a little uncertain. I'm not asking for your views on Trump, but at this point now, the jobs picture was pretty good. We're absorbing some heat today. Your final thought?
Yeah, we're in an area right now where high quality stocks are going to be your friend. It doesn't matter if they're going down 2 points or if they're going 10 points. You have an opportunity to pick up high quality, add it to the portfolio, or to establish a new position that you may have wanted but was too elevated to go after. So these are the things that will make you more money in the long term, that will build the portfolio that you want to have. And the last thing being, take a breath. Remember that this is only a blip on the radar screen and that there's plenty of opportunity out there to win again and again. That's what the markets are all about, Nicole.
All right, and this could be the time for treasuries. Treasuries are hot once again after having lost in a big way. All right, thank you. Good to see you, Aquiles Larrea. Thank you.